Hi guys, so in today's video, we will be discussing credit scores, and this is all done in partnership with 50/50 Leadership. So what is a credit score? A credit score is a number from between 300 and 850 that determines your credit worthiness. The higher your score is, the better credit you'll have, which shows that you are good at managing money and paying on time. So what is a credit score used for? It's used for lenders to see how likely you are to repay your debts in a timely manner. A lender will pull your credit report, which displays your credit history, and if your credit score is high, then lenders are more likely to grant you a loan because they can see that you're reliable. So, a person receives a credit report from each of the three credit bureaus every year, and the three credit bureaus are Equifax, Experian, and TransUnion. So, what is on your credit report? Your payment history, public records, such as if you experience bankruptcies or foreclosures, and any opens account you have. So, like checking accounts, and savings accounts, and your balances within those accounts. So, here are some factors that make up a credit report. There's five of them, which is payment history, which shows if bills are paid on time, credit utilization, which is a measure of how much of your available credit you're using, length of credit history, which is how long has a line of credit been established. And then there's new credit accumulation, so number of new lines open, and types of credit, like car loans or mortgage loans. And as you can see by the chart on the right, payment history, which is 35%, and credit utilization, 30%, take up the most, with length of credit history, new credit accumulation, and new types of credit having lesser percentages here on the right. So now we are going to go back to Ella. And if you can remember, Ella is a single 24-year-old who works as a portfolio manager at a bank in California. Ella's credit score is 800, which is really good, and we're about to discuss why. So, good versus bad credit scores. So, as you can see, in the 800, 850 section is excellent. It's right here in dark green. So, because Ella's credit score is so excellent, she is more likely to get approved for loans than if she had a 300, 400 credit score, which is in the dark red. And if your credit score is here, you are not as likely to get approved as if you had a higher credit scores because financial institutions don't know if they can trust you to pay them back on time. So if you're in the 300, 400, 500, or the orange or red section, what are some ways you can raise your credit score? So number one would be to always make your payments on time and in full. Number two would be to build a solid credit history because the more credit history you have, the more evidence that you are a responsible person who can pay a bank back on time or your lender back on time. And third would be to keep your credit balance low because the higher your balance is or the higher in debt that you are in, the lower your credit score is going to be. So, why is having a good credit score important? So, through this whole video, I've been kind of alluding to the fact that having a good credit score gives you a better chance for credit card or loan approvals. So if you need money for, let's say, sorry about that. So if you need money for going to college or buying a house or buying a car because you might not have that money on hand and you need a loan, banks need to know that they can trust you so that you will like pay them back on time. So, what are some benefits of having a good credit score? You can more easily secure a loan because the trust is established. You can get better loan terms. You can avoid security deposits on cell phone and utilities. You can lower interest rates on cards and loans, and there are more options to buy and rent. So, some examples of loans you might have are car loans and student loans and personal loans. And to get money for those loans, you have to have a good credit score because there needs to be trust established that your lender is going to know that you have the capability of giving them their money back on time in a timely manner and in full. So thank you so much for listening, and please stay tuned for the next video.